Hey, what's going on, everybody? Hope everybody had a wonderful trading day today. So, I wanted to bring this video to you guys' attention before tomorrow because tomorrow is a very important day in the market. We are going to see if the stock market, the SPY and the QQQ are going to break down further or are they going to get a relief bounce. So, tomorrow is a very important day in the market. So, I would say that the SPY and the QQQ are currently on life support and the bulls need to do something to get the market out of the jaws of death, what I call the jaws of death. So we shall see how that goes tomorrow. So without much ado, I'll just head straight to the chart and then I'm going to break down what is going on. And if you watch my video on Tuesday, you realize that I laid out the game plan. So those that took advantage of it, I'm sure they are happy and laughing straight to the bank. We saw a breakdown in the DIA today, exactly to trade plan as I outlined on Tuesday. So today's video, I'm going to show you where the SPY, the QQQ, and all the major indices are heading next, and so that you can prepare and execute on it. Okay. And yeah, so I'll go straight to share my screen here. So over here, we have the economic calendar. So we got the employment news that came today, and the jobless claims was just a little bit higher than expectation, so it wasn't really a big deal. But what I'm continuing to see is that the smart money and the guys that control the market are not buying these job numbers, right? The job numbers looks like they are fabricated, or are they real? So nobody knows, right? We shall see how things work out in the weeks and months ahead, right? I've said it since last year that in 2026 at some point the US economy is going to go into a recession, right? The only thing holding the economy right now is the AI, right? Is the AI cap spending. Apart from that, the US economy is not in good shape, right? Contrary to the numbers that we are getting from the job numbers to all the economic data about GDP, all those things does not look like, because the regular Joe is not feeling the so-called boom in the economy. The economy is weakening, and the labor market is the last domino to fall. So we shall see how that plays out in the coming weeks and months. Okay. All right. So tomorrow, the market is expecting the CPI inflation data. So this is why I think about this inflation data. I believe that the inflation data uh, might be a little bit high, right? Due to energy prices. Energy has been going up this year, and oil prices have been going up. So, might we get a higher than expected CPI? If it's higher than expected CPI, then that might be good for interest rate cuts, or maybe the market might react to it negatively. Nobody knows. We don't know how this is going to be. But over the years, in the last few years, we've seen that CPI estimates have usually come up like, exactly to what has been forecasted. So sometimes it's just maybe uh zero point zero 0.01 difference or something like that. We shall see how this works out in tomorrow. So I will not be surprised if the CPI number, which is forecasted to be 2.5, to go up to maybe 2.6 or 2.7. Who knows? Also, rent prices also came down, and that could balance out the energy prices. So we shall see how that plays out. And this news comes out, economic data comes out at 8:30 a.m. Eastern tomorrow. So that is a market moving catalyst, market moving data that's going to move the market in one direction or the other. Okay. All right. So now let's go into the charts and see what is happening. My oh my, this market is cracking by the day, right? The market is cracking by the day, right? So I've said this several times that, as a trader and a technical analysis trader, I always ask myself, like, where is the risk? What is my risk to reward in any kind of trade, right? So if your risk is smaller than your reward, then you go ahead and take the trade. Currently, as we see here, um, you know, currently as we see here, based on historical data, we can see that this parallel channel here, we have the COVID low. Um, so we got a bounce here in COVID low, went to all-time highs. Then we sold off into the 2022 bear market, and we went up again, and then we came back here in the Liberation Day April low sell-off. And then since the market has rallied to the highs here in this one happened in October. Since then, we've not been able to crack above that. And so far, we are seeing what it looks like a rounding top, right? If you look at this closely and you put a circle here, this is a rounding top, ladies and gentlemen. This is a rounding top. So we are at the point, and rounding tops are characteristics of distribution phase in the market, beginning of the distribution phase in the market. So I will not be surprised if this market cracks. And I've been saying this for a long time. So first of all, the most important thing is that we have to take steps. Step 1, step 2, step 3. So the first step is going to be for the market to go into a 10% correction. And that has started. So right now, this is the weekly time frame here. And if we break below, you see this purple line here? This is the 20-week simple moving average. Anytime, any day, if we break below this and the weekly candle closes below this, you know that we have a change in character in the market, right? So if we have that break, then we are going to head to over here, right? The next target is going to be here where the red line is. This is going to be the 50 SMA on the weekly time frame. Then my ultimate target for the correction or sell-off is going to be here, which is 612. So from now to the end of March, I believe that we are going to head to 612, right? Then once we get to the 612, we can now think about a possible bear market. So first things first, we need to get a correction first, then we can think about a bear market. So what's a correction? The technical definition of a correction is that you have a sell from the highs to over here is going to give you 11%, which is so 10% or more from recent highs or all-time highs is going to give you what is called the correction, right? And then if we get something, let me put back the lines. Based on this pattern here, if we were to sell, the worst case scenario is for us to come all the way here to the bottom of this parallel channel. So it's going to be from here. So it's going to be like how many over here is going to be from this area here, from here to here, right? This is going to be 21%. So 20% or more is technical definition of a bear market, right? And I believe that once we break below this previous all-time highs, which is going to act as support, then we are going to push towards getting to that lower level here. So that is the game plan. And right now, what I'm doing is that even members of our community have been telling members that be very careful going big on longs at this point in time, right? Do not take big position into longs because it might not work, right? I know that buy the dip has been working last year. Anytime it goes down, buy the dip, but this time is different, right? This time is different. So immediately we break below this purple line, you know that it's over, right? It's over. We will definitely get the 10% correction, right? So the 10% correction is going to give us a lot of buying opportunity, right? That's going to be the real buying opportunity if it holds, right? So this is the time when your best performing stocks and assets and stuff, you have to take some profit off and put some cash on the sideline because that cash will come in handy if we get here. Because if the market is to correct by 10%, the SPY, then you know that your regular high beta stock will correct by 30%, 40%, or even 50% decline. Some of them have already started. So imagine if this continues, it's going to get worse. So also, the smart money, they are de-risking. So they are selling all their risk assets and putting the money on the side and also pushing them into defensive names, right? So what I think is good. So for tomorrow and the days ahead, right? What I'm looking at is that I'm looking at this trend line closely. This is the April trend line, right? This is the trend line from the Liberation Day tariffs lows to this area, right? It was support, and then what did it do? It broke and it came down. And now this trend line, I have modified it to move it here. Okay. So I'm being generous to SPY. I'm being generous, right? So I'm just trying to move it in favor of the bulls, right? I'm moving in favor of the bulls. Yeah. So here we have this trend line here, this one here. You see here, this is the April lows, and then here this is the low from February 5th, and then we are here, right? So tomorrow, so here we are at the 100 SMA. So this 100 SMA has been an anchor for SPY. Every single time it came there, it bounced. However, this is getting weak. So I'll show you why it's getting weak. Because if you look at it, the first touch here was let's go to this chart here. The first touch was here. This was like May 12th, 2025. One touch, two touch, right? Then we have here this one source. So 1, 2, 3. They are all support, right? And here 4, and then here is 5, right? We can even add this to it as 6. Okay. So tomorrow, if we break this, it's going to be the 7th time that this has come here. So 7 times we have 80% probability that we are going to break it to the downside. Okay. So this white line has become weaker and weaker the more touches it gets, or the closer it touches it, right? So that is something in technical analysis that puts the probabilities in your favor. Okay. So let's go back to the main chart here. So tomorrow, what I'm going to be watching is that, are we going to break below this level? This is where the 100 SMA is, right? If we break below the 100 SMA, then we know that we are heading down, right? So what's going to be the next target? Next target is going to be here, 671. The next major target is going to be here, 652. So this will surely come to the 200 at some point if we break below this level, this trend line, and then this 100 SMA. So what I'm watching tomorrow is that if we break below here, I'm going to load up on put options to the downside and capitalize on the move to the downside. And these are going to be my profit targets if we're able to get that move, right? So I'm going to look at swinging it, having it in there, trading it as a day trade and also a swing trade to capitalize on the move. Okay. All right. So let's look at the VIX, right? Let's look at what the VIX is doing. So volatility is spiking. So here we were able to get the VIX above out of that 17 zone, and now it's trading here. So we are seeing this breakout happen here, and so far we are getting this move. So here we have this. So far over here, we have this move here. So if we're able to break here tomorrow, if we break this trend line tomorrow, we are going to spike. VIX is going to spike, and it's going to come to 23, and then from there we can get that breakout, right? And this VIX can go as high as 28 or even higher. So there's a lot at stake for the market, and tomorrow is a make or break day for the market. So maybe the CPI, if it comes in hot or worse than expected, it can put that pressure on the market and we can get that sell. So we shall see how that plays out. Next thing I'm going to look at is that I'm going to look at the QQQ. So the QQQ has been the weakest ETF of them all. Has been the weakest ETF of them all. So make sure you watch Tuesday's video. I explain what is happening here with the QQQ. So QQQ has put in what is called a double top. So double top is a bearish reversal pattern, right? So bearish reversal pattern means that we are heading down, okay? And so far, we have what is called the Wyckoff's distribution model, which is our signals of market tops and the end of a cycle, okay? So here, this double top, we've already seen it. And then here, look at what's happening here. With this trend line here, if I draw this April trend line, this is where we are at. This is exactly where price came today and bounced, right? It held. So it's waiting. So tomorrow's day trade, or those that want to swing trade, is very simple, okay? If we break below this trend line, it's an easy put trade, right? You buy put options to the downside, and then if you are a futures trader, you go short on the NQ and you capitalize the move. So the next target is we are coming here to the 200, right? That's the next short-term target I'm talking about in the next couple of days. If we break below this, then surely we are going to get that. And that can happen as early as Monday, right? Or even midweek next week. We can get that sell off to the down. So full disclosure, members in our community in the swing trading service, we are already in this put option trade. So we bought put options expiring in March that we are holding because we are looking for a big picture idea trade and a big move to the downside. So my ultimate target for that trade is for it to come here. See here? This is the ultimate target, right? So we are not in for a small move, we are in for a big move, right? And it requires patience. So sometimes they are going to play games, but I believe that any rallies that we get in this market, any pops are going to be things to do with what is called exit liquidity, right? So the smart money are exiting the market. So anytime we see any pops in the market or any rallies, you get this exit liquidity. So you look at this, we got this rise here, and then we got here. What did it do? Then it went up, and then what? It started selling again, right? So anytime we get a pop, we start selling. So this is a classic example of exit liquidity. So the smart money are exiting the market at record pace, and they are doing so by pushing it up and getting retail traders and investors to chase it, thinking that okay, we can buy the dip and then it sells up, right? So tomorrow is a make or break for QQQ, and if it's unable to hold this trend line tomorrow, then it's lights out for the bulls. We are going to come here all the way to the 200, and that's going to be the first time since April that we have hit the 200 SMA, right? And that's significant, right? That's going to be a significant milestone for the best, right? So we shall see what happens tomorrow, and we are going to trade it accordingly. Full disclosure, I already have like a swing trade here on the QQQ expiring in March, and we are holding it and looking to target these profit targets here. Ultimate target being 541. Okay. All right. Next one is I'm going to talk about, so this DIA. So on Tuesday, I gave you guys the blueprint on how I plan to trade DIA, right? So this is one thing I like about technical analysis, right? It removes all the guesswork and all the narratives and all the nonsense and BS and stuff from the financial markets, right? So it's either it has to go up or go down. Sometimes you can look to trade that accordingly, right? So here, what you need to look at is that we had this trend line here. This trend line here is from uh, October 2023, right? And if you extend it here, it comes all the way here. So if you look at it, this is the trend line, right? And I mentioned that this is a what I call mother of all trend lines, right? And you don't just break a mother of all trend line just like that. So you can watch the short video, the YouTube short. You can also watch the video from Tuesday, and you are going to see the breakdown for the DIA, right? So reason why I said that we are good, this is going to likely be a short is that we have what is called a topping tail candle. So anytime you have a topping tail candle at the highs of a big move, this is when the Dow hits. That was Friday. Dow hit 50,000, which is a big milestone. That's like a big milestone, a psychological number. Anytime price hits those psychological numbers and milestones, it's a place where the smart money sell, right? It's called exit liquidity. However, the retail trader who is untrained or investor is going to be chasing that and buying. You don't buy there because that's where folks are offloading. You don't buy there. And guess what? What happened is that we had this topping tail. So this topping tail was a stop loss for the trade. And then this trend line here, this is the October 2023 trend line. That trend line acted as resistance. And then we see this sell, right? So with this sell, we can get more selling to the downside because this a bearish engulfing candle, and we could get more follow through tomorrow if the market is weak. So the DIA is coming down here, can come to this area, to this bottom trend line area, and try to see if it can bounce. Then from there, if it does not bounce, then it's going to go lower to the 100 SMA. So this is still heading to the downside, but the DIA has been more resilient and stronger than the SPY and the QQQ. So it could, I don't expect it to sell off that much, but this where is going next, the next target. Okay. Then This was another one I alerted to the entire community today, right? So again, I've been checking out this XLF is the ETF for the financials, right? The banks and stuff like that. That's the ETF for it. So this ETF here is an ETF where you have all the banks like your Goldman Sachs and all that stuff in there, right? So anytime you get this ETF selling, that means that something ominous is brewing in the financial sector, right? I don't know what it is. I can't pinpoint it. I don't know what it is, but the technicals was telling me that hey, this is due for a sell-off. So what I did was that I set an alert. I've been stalking this since Monday. I set an alert here at the 200, this yellow line, and said that anytime we break it, let me know and I'll enter the trade. So immediately we broke it. I got the signal from here. I set my alert. I got the signal and I alerted it to the entire community. And this trade here, this move here from here to here, we bought the XLF $52 puts expiring March 20th. And this gave us 70%, almost 70%, right? Move in this from that just move. And we have a lot of time left on the contracts, right? But there's still more downside. So let me put the trend lines here. So here we have this April trend line. If you extend it, it coincides with the 200 SMA, broke it and went down. Okay. So here as well, if you go to the weekly, to make it simple, if you go to the weekly, you can see that this has put in a head and shoulders pattern. And then with a head and shoulders pattern, typically you can calculate what is called the measured move. Okay. So the measured move is here. So you see where the yellow line is, that's where the neckline is, or you can call it the armpit, right? Like the head, this armpit area. So basically what you do is that you pick this plumb line here, you put it in the where the yellow line is, that's where the neckline is going to be, and then you get what 49. So this can go as low as 49, which is close to the 100 SMA here. So we caught this move. So tomorrow, if the XLF is unable to hold this 50 SMA, then it's going to head down to the next target, which is going to be 51. And then here is going to be the moment of truth because this is a critical support level. I expect some kind of a bounce there. And then maybe you can get something like this, right? We can get a move to the downside, and then we can get a bounce to this area, right? And then that bounce is going to send this down like that. Okay, something of that. So, or we could just pierce through and go. Okay, so here, this stuff here, my ultimate target is for you to come to the 49 level, and anything beyond that is going to be a cherry on the cake. Okay, all right. So, last but not the least here is a stock that I'm watching. It showed relative strength today, so we can look to capitalize on it tomorrow if there's a dead cat bounce in the market. It's CoreWeave. So CoreWeave here, I've been watching this trend line. So if you look at this, even though the general market was red, CoreWeave was green. So that shows that it's showing relative strength. So if it could master this trend to clear these downsloping trend lines tomorrow, we can get a blast through and we can go into 103, and then later on we can go to 114. So that's something that I'm going to be watching tomorrow and in the days ahead if we get any bounces in the market. So yeah, so that's about it for tonight. So I hope this was insightful. Put your comments in the chat and let me know what you learned. And then I'm going to we are also going to put your, if you've not subscribed, make sure that you subscribe to the channel, hit the notification bell, and also share these videos with your friends and family so that they can also learn. So yeah, so thank you very much for tuning in and watching this video. We'll see you in the next video. And again, you are invited to trade with us tomorrow free of charge. So you can go to our community, tradingrich.com. So make sure you join the community. On the community there, you are going to see an announcement with the Zoom link, and you can join me live tomorrow to trade options and futures live day trade at 8:45 a.m. Eastern. Have a good night. Bye for now.